This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
This chapter considers professionalism and professional ethics. Much of it should be revision from your studies in auditing, typically in F8. First of all, the definition of professionalism. And here we have one, there are quite a few around, but it's a conduct, aims, or qualities that characterise or mark a profession or a professional person. Now that's a slightly circular argument. It refers back to a profession or a professional person. And what is a profession? And definition suggests that a profession is something which requires specialist knowledge and often long-term and intensive academic preparation. Typically, professionals, we kind of know them when we see them. We would realize that accountants are professionals, lawyers, doctors, architects, engineers, and what's common with all of these people is that there is this body of study, body of knowledge, and they are to bring this into their jobs so that they carry out their jobs, and indeed you would call them their professions, very well. You expect competence, you expect honesty and integrity, reliability, that the person will do what they say by when they say they will do it, respect for you perhaps as a client, but for everyone they're actually dealing with, and self-control. It's not really a mark of a professional if they lose their temper. Public interest. Public interest, we need to have an idea what the public interest is. And I think the key part of realizing what public interest is, let me just get my pen kind of working here, is that we're looking at all society. It's the net benefits derived for and procedural rigour employed on behalf of all society in relation to any action, decision or policy. And that's a definition of public interest given by the International Federation of Accountants. Public is all stakeholders. So when we're, for example, perhaps setting out a cash flow forecast, we're probably doing that on behalf of a particular client, but we have to be aware that if you carry out a cash flow forecast which is too optimistic and leads people into perhaps investing in companies which they shouldn't do, then you can't really be carrying out your duties with regard to the public interest. You're focusing on your client getting the money, and you're kind of saying, I don't care if the rest of society, pension funds, investors, banks or whatever, lose their money. The interest we're looking at, there should be greater economic certainty, in a way less risk involved if they carry out your duties in the public interest, better decision making, reliable information, for example in the publication of financial statements every year, good corporate governance, so that the owners of the company ultimately can have some confidence that directors are running the companies for their benefit. And of course, effective performance management. Is the company doing well? And in particular, maybe are the directors doing well? Now, as professionals, as trainee accountants, as hopefully members of ACCA, our professionalism is very much guided by professional ethics. And this is where we will have met, or should have met these before, in the ACCA's code and their rule book, where professional ethics are set out. We're going to go through it fairly quickly because it should be revision. And the framework, as it's called, is that we have our set of professional ethics, our fundamental principles. They will be subject to certain threats, And what we have to do is to protect those fundamental principles by putting in place certain safeguards. What we want to do is to try to reduce the threat to acceptable levels. It is often, it is often very difficult to eliminate a threat entirely, but we want to reduce it to what's known as acceptable levels. Now, the fundamental principles, which should be engraved on your hearts really, is integrity. Remember, that's slightly more than honesty. Integrity means, for example, standing up for your beliefs. It means not turning a blind eye. If you think something's going wrong, you should investigate it. You can't be exercising integrity if you pretend not to see or are frightened to look. Professional competence and due care. We need to keep up to date with developments. We need to spend enough time to do properly what we've been engaged to do. Confidentiality. As accountants, we are immensely privileged to see all sorts of confidential information. We often see the financial statements before they're published, for example. And we have to keep that confidential, except, of course, if there's a legal duty or perhaps a legal right to disclose that. Professional behaviour, we must comply with the law. And finally, objectivity. We must not be subject to bias. We must focus on the job at hand and look at what we're expected to do really on the basis of fact. Threats to objectivity, integrity and independence. Again, these should be well known. Self-review threats, basically checking your own work. Self-interest threats, trying to enrich yourself or the temptation to enrich yourself. Familiarity, when you become friendly with people, it's hard to maintain that objectivity. Advocacy, where you perhaps give more support to somebody or a firm than really the facts would suggest you should. Intimidation, and sometimes people talk about a management threat, that you get too close to the management of the company, become too aligned to the management of the company to carry on your work objectively. Here's a list of self-interest threats. I'm not going to go through all of these. As I say, these are substantially revision. By and large, one by this stage will almost be able to be alerted towards a threat. Financial, being promised a large bonus if you do something in a certain way, owning shares in the company and you think the shares will go up if perhaps there's a favourable audit report or perhaps a favourable cash flow forecast. Being given loans or guarantees by a company unless it's their normal business and on their normal terms. Where you have a financial reliance on your client and high percentage fees so that you simply can't afford to fall out with that client, because if that client goes away, then you're going to have a huge gap in your fee income and it's going to make you very difficult to be carrying on. Lowballing, going for a job, tendering for a job with that client, but putting in a ridiculously low fee in the hope, keeping your hopes alive that this will get a foot in the door and that this uneconomic low fee will be later compensated by other lucrative work. We have family and personal relationships. Close family members, we want to stay in their good books. We don't want to let them down. We don't want to get them into trouble. And a lot of pressure maybe not to report things as they are. And even if client relationships didn't start off with familiarity and friendship, over a number of years you become friendly with people. And once you become friendly with people, you lose your professional scepticism. You should always be doubting what they say and looking for other evidence. That goes, you begin to trust them. Self-review threats, basically checking your own work. We're very bad at that. We tend to think that we've got it right. If we make an error of principle, we'll simply repeat that. And anyway, it's terribly boring. So really, we should be making sure that if we do some work and want it to be checked, it should be done by someone independent. Might be somebody in the same company, but should be coming to it with fresh eyes. Familiarity threats. A close relationship. We need to have very wary there. We need to perhaps say, well, I've been dealing with your company for 5 years, 7 years. Perhaps it's time now for me to move on. Let a fresh set of eyes come in. Someone who's more questioning and more and more skeptical, and they can perhaps give a more objective, professional scepticism type judgment. And finally, there are or can be intimidation threats. Thankfully, this is not often the threat of physical intimidation, but I suppose that could apply. But intimidation threats come in from maybe a threat to your job. If you don't sign off this cash flow forecast, then maybe your promotion prospects are going to be damaged in some way. Again, we need to try to be wary about these. These are very difficult to deal with because your income, your job depends on your success with the company, and it is very difficult to perhaps stand up to a very intimidating manager. Hopefully, and we'll see this later, hopefully your company will have some sort of mechanism in place that will allow you to complain or to report intimidation, so you can remove yourself from the problem. Maybe you can contact professional companions, or indeed your professional association, who may be able to give you some help in regard to intimidation threats. So remember the overall framework. We want to keep to our 5 principles, our 5 ethical principles. These are going to be subject to threats. We're not going to be necessarily acting ethically. We're not going to be acting professionally unless we can reduce those threats to an acceptable level. So we can say hand on heart that we are acting with integrity, we're acting with objectivity, we are exercising due competence and professional competence and due care, that we've acted professionally, and unless we can say that, then we're simply not acting professionally.